Now, we've got a very special segment coming up right now, and this is going to be our second keynote address today. And I think it's also a very interesting one because it's about SG women, financial well-being, independence, and resilience. We do have the very amazing Dr. Joanne Yoong joining us. She is CEO, Research for Impact Private Limited. Please welcome Joanne Yoong.
Hi, thanks everyone. Thank you very much, Kyle. It is impossible to follow performance by Ben King with any sort of keynote speech. So
but I think you're going to do fine. I think you're going to be fantastic.
Do my best. I really hope so. And also any moderation by Kyle. So thank you guys, everyone, for sticking on with this keynote. Again, my name is Dr. Joanne Yoong. I'm actually a senior economist at the University of Southern California. But I am also a gig economy worker. I have my own small business here in Singapore where I operate a consultancy called Research for Impact. And what we do is try to take academic research and bring it to sort of real life. And quite a bit of work actually that I do actually is in the area of thinking about financial literacy capability and how that intersects with gender. My personal history actually is kind of relevant to this. September the 11th is a very special day for me. I started my career actually as an economist and maths major. And I was working on Wall Street on September 11th. And on September 11th, I was late for work, as I usually am. And I was stuck underground for several hours. And when I came out, it was apparent to me that the whole world had changed. And in that moment, I decided that I would leave Wall Street and then try to do something different with my life. So September 11th is a big day for me. And what I decided was that I would take my knowledge of finance and really try to make social impact in the world. And I went on to do my PhD in development. And so one of the things I really love to do is pieces like this, where we try to think about how the world of finance really has a big impact on people's everyday lives and how empowering people with finance makes a big difference to their entire well-being, including, as Kyle was actually referring to, their health, their emotional well-being, and their entire life course. So what I'm going to try to share with you today is really, if I can get my slideshow to work, which is always is some work that I've been doing with some colleagues internationally, and then some work that I've done locally on how we improve financial literacy among older Singaporean women, being myself now in the Elder Shield generation. And I'm going to say a few words about how we can try to make this work for young women and what young people actually, regardless of gender, should be doing before we then transition to a really fascinating panel of other speakers as well. So what do we really know about women and financial literacy? Okay, so the big three questions are three little questions, actually, we call them the big three, that are very standard in the academic literature to measure financial literacy. And these are by two researchers, Anna Maria Lusardi and Olivia Mitchell, who actually are the people who built the entire field of measuring financial literacy in a scientifically rigorous way. And so if you look at these three questions, Singaporeans, I know that you guys have math scores that top the world, so this should mean nothing to you. But if you look at these three questions, they're really straightforward. The first question says, if you had $100 in a savings account and interest rate was 2% a year after 5 years, how much would you think you would have? So that's really about compound interest. The second question is to try to understand if people know what inflation means. And inflation basically means that when your grandma told you that when she was in primary school, she had 50 cents a day, and that was it, so you should be happy. You say, Grandma, 50 cents when you were young is not 50 cents today. We all understand that that's the concept of inflation. And what we want to know is whether people in general understand what that means for their savings. So the second question is, if you imagine interest rate on your savings account 1% a year, inflation is 2% a year, after 1 year, would you be able to buy more, less, or just the same? And the last question is about portfolio diversification. And that really just means that you want to make sure that you have a good spread of assets. So do you think the following statement is true or false? Buying one company's stock is safer than a stock mutual fund. So they seem like really easy questions. You can see the answers on the right. But actually, if we think about it, it actually presupposes that people know a lot about investment terminology, as well as mathematical concepts. And in fact, when we look at this around the world, so my colleague Anna Maria Lusardi has done a survey globally of 143 countries, and this was done in 2015. And what she found is that, globally speaking, if you look at this map, the distribution of people who are financially literate, which means that they can answer 2 out of these 3 questions, is actually on average less than 1/3. And let me say that again. Less than 1/3 of adults around the world are actually financially literate, even with these three very, very simple questions. What's more horrifying for us actually when it comes to this particular topic is that the spread of financial literacy, as you can see on that map before, is not even, but among genders, it's also not even. And so what this map, this graph is really showing us on the right, if you look at the vertical axis, that's the percentage of financially literate women. If you look at the horizontal axis, that's the percentage of financially literate men. And so anything above that line is a country where financial literacy is higher among women. Anything below that line is where financial literacy is higher among men. And what you can see is along this whole spectrum, from countries with low financial literacy all the way up to countries with really high financial literacy, the majority of the world is skewed in favor of men. So very, very few countries, right, have a population in which women are scoring better on these three simple questions than men. More generally, if we take a step back and we look at some of the academic research on how women manage finances, it's not necessarily true to say that women are not more financially able. What we find is that in international studies, women are able in different ways. So when we look at studies looking at how men and women sort of make ends meet, so making sure that your costs and your budget are matched with one another, men and women do about the same. And actually, in terms of keeping track of finances, women do a lot better with day-to-day budgeting. But when we look at what's happening for the long term and in investments, we find that men do better than women. Men are more likely to say they're long-term planners. Men are more likely to enjoy and spend time choosing financial products and keeping in track with financial markets. Right, so inherently, this is also a problem because around the world, we find that women have lower earnings. They're less likely to be in the formal economic sector, but also, and the flip side of this is that women are more likely to live longer, right? So in Singapore, for example, men your age of, basically you can expect to live 82 years, and women, we have 83 years. We have one whole year to play mahjong without you, right? And so that means that we have longer need in retirement, but we have less assets to start with. So women have potentially more ability to save, but they have less overall resources, and they're not doing as well for managing for the long term. And so that's very general. And what about Singapore? So surprisingly, we don't have as much data on Singapore as I would like, but I'm going to share with you some of the key statistics that we do know. And what we do know is that when we look at the Global Financial Literacy Survey that I talked about before, right? 67% of men versus 52% of women were financially literate. So what that means is that there's a gap of 15% between men and women on financial literacy in Singapore. And this gap is actually surprisingly 3 times the size of the global average gap. So the gap between men and women at a population level is really big in Singapore. And this is very surprising. This is surprising for many reasons, right? One of the things that we know, and this is data that comes from the OECD's PISA study, which is a study of high school students in Singapore, is that at high school level, young women are actually as skilled or more skilled than young men. Sorry, young men, right? Kyle will have a lot to say to me after this, I'm very sure. But in international tests, what we find is that there's virtually no gap in math and science for young women and young men at secondary school level, and girls actually do slightly better in reading. So when it comes to these core skills, women do better. We also know that in Singapore and also in the region more generally, women are more likely to have savings accounts. So this data actually comes from the World Bank. It's not for Singapore specifically, but Singapore is actually quite representative of East Asia and the Pacific. What this data is showing us is the difference between having a bank account between men and women for different age groups in different regions. And if you look all the way on the right, what you'll see is that in East Asia, young women 18 to 22 are much more likely to open and have a bank account than young men. So we're also more likely to be participating in the financial services sector, right? They're more likely to be responsible, but they are not investing for the long term. And this data comes from BlackRock's Investor Pulse survey in 2019. And what we find is that when we look at Singaporean women in general relative to Singaporean men, they're much less likely to say they've started saving for retirement. Many more of them rely on their cash and personal savings or their family connections. And when it comes to millennials, what we'll see is that young men have taken a head start. So young men are much more likely to say that they've started investing for the long term. So even though women are as capable with their core skills, even though they have bank accounts and they're holding those and they're probably saving much more intensively, they're not making the kinds of financial decisions that actually lead them to long-term independence and resilience. What does this look like at age 55? I know that's a very long way away for most of you. We actually have some idea of what that looks like because we have surveys of senior citizens in Singapore. This is from the Ministry of Social and Family Welfare. And this is data asking people of the age 55 and above what their financial situation looks like. So where's their current income coming from? And what you can see here is data from 2005 to 2011. The current survey is still in the field right now. The two bars on the left are men. The two bars on the right are women. What you'll see here is that the light blue is income that comes from children and spouse. And what you'll see is that for men and women both, right, children and spouse at the age of 55 plus is a very big source of income, but it's much bigger for women than it is for men. If we look at personal savings, it's about the same, which is consistent with our idea that women do save, right? They just put money away in their bank accounts. But when we look at CPF, what you'll see, surprisingly, for some of you maybe, that fraction that's coming from CPF is not large. And that again is very consistent with the message that people are saying, which is that CPF is a core asset, but it should not be your only asset. And that's bearing out at the age of 55. Most importantly, what we are also looking at here is the fraction that's coming from investment income. And what we see here is that for men and women both, right, the fraction that's coming from investment income is becoming increasingly important between 2005 to 2011, but women are still behind men. And so what that means is that over time, what we're seeing is that women in their old age are more dependent on their children, their spouse, their personal savings, and they're less driven by the kind of investment decisions that are taken when you're young. How can we do better? I don't want to tell you that we can't do better. One of the things that we have done, which I want to share with you very briefly, is that we've worked with the City Foundation actually, and Sao Foundation, which is a foundation here in Singapore that deals with older women, to put forward a financial education program. And this is actually a very long-running program. It started in 2008, and it was a group-based financial education program for women between 40 and 59. And what they did was get together in workshops. They had a curriculum that would focus on their financial literacy and social empowerment and teach them not just concepts of finance, but really how to take steps to talk about finance among one another, to negotiate with their families around financial matters, and to have open dialogue with financial providers and to make a bit of financial plan. And what we found was that this program, when we came back 10 years later to look at how women were doing, actually was extraordinarily effective. So what I'm going to show you is that if we look at a benchmark comparison for women age 50 plus without financial literacy education, and this is data taken from a match comparison group that we set up in order to compare the results to our program participants, what you'll find here is that if you look on the left, that most women in the background population say that they do have savings. And again, that's an artifact of the fact that women save a lot. We have CPF, so most women have savings. But many women say that they don't actually know how much savings that they have. And about 75%, 77% of them say that they have an emergency fund to cover them if they need for 6 months or so. So there's a 25% gap there of people who don't have enough funds if they needed to have to stop working, for example, if something was cut off for 6 months. So savings-wise, okay. But when it comes to investments, what you can really see is the trends that we talked about coming up. So more than 50% of women say they don't have a good understanding of investments, and 20% further say, I don't even understand the question. And for those people who have their own investments, right, only about half of them say that they know the value of their own investment. So they may be holding some investment, but someone else is managing it for them. Once they have financial education, what you can see, and the group on here, the light bar here is the group of people who have received financial education 10 years ago. What you can see is that these women significantly more likely to have some savings, but also to be more empowered about their finances. So they know the value of their savings. They're more likely now to have an emergency fund. So that number goes up to almost 90%. And then when we look at investment knowledge, that really changes a lot. So now we have a much larger group of women saying that they have a good understanding of investment. And in fact, almost 70% of women knowing the value of their own investments. And that's a huge change based on one curriculum intervention that was done 10 years ago. More importantly, when we ask them about resilience, these two graphs here on the left are the women in the financial education group. On the right are the women in the match comparison group. What you can see here is that again, I'm going to spend almost no time explaining this, but what you can see here is that women who have financial education are more likely to be coping well, and actually more likely to be saying that they're coping well, which is the dark green bar, and actively looking for ways to further cope well. So they're doing better in general, and they're also more actively looking for ways to improve their situation. And so what that means is that having this training, this empowerment, which is not just about concepts, but about culture, helps them to cope better when we have to go these shocks. Shocks are a part of life, but how we deal with them, right, is something that we can change. Last but not least, I'm just going to say this, that the most important thing about our program at the end of the day is that it gives women a stronger sense of control and well-being. So they're less likely to be stressed about their finances, and they're more likely to feel empowered about their financial future. What does that mean for us today, especially for all of you? 40 is a long way off for many of you here. It means that it's never too late to help. That's great, right? Some intervention when you're older can very easily move that needle in effective ways, but also that it's never too early to start. There are going to be these gaps in the environment that we know that we're going to need more as women because we're going to live longer. We have a wage gap to manage. That's a different talk altogether. We have a personal investing gap. We have women who don't invest as much, and we have a professional investing gap. So we are less participant. We are fewer and fewer of us are in the banking sector. But we can address these things. We can address the planning gap. We can get started earlier. We can address the financial literacy gap. We can try to educate ourselves, and we can try to address the confidence gap. So about 30% of the gap in financial behavior, actually, in some of the new studies that we've done, is explained by the fact that women have the same skills, but are not confident to take action. And that's something that I hope we can all take away as well, right? These are things that we can take action about today when we're young, and in the future, it's going to pay dividends going forward. So that's all I have today for the keynote. I think our panel actually is going to discuss these in much greater detail. So I'm going to step back here and then turn this back to Kyle and allow the panel to take over, and we can answer some of the questions that I think are coming up as well one-on-one.